Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. Welcome to Accrued, the Fintech Confidential series presented by LoanPro. We actually have Raktim Mitra, the Chief Lending Officer from Varo Bank, on.
Like AI, kind of permeate into this space as well. So there's a lot of use cases that have already come up around, use of AI in servicing. There's, some fraud use cases. I think soon enough we will see more AI use cases in credit. I recently saw a survey where I think about 45% of customers said that they were looking for credit, which is so important, and they get denied for where their credit is. So it's so important to kind of think about how do you kind of serve that space. The things that have stood up to me in terms of alternate data, it's the relationship data element. Obviously, cash flow, transaction data, payroll data is very important. If you just compare it with traditional bureau data in terms of underwriting, customer behavior data is another thing that I have seen reasonable success with it underwriting. At least for new businesses, I mean, they have to be fast. As I said, they have to be efficient. They have to be personalized. They need to meet the regulation. And I just don't know how they do that without being on modern tech stack. And if you are in kind of the financial space and the banking space, enabling the ability to spend, borrow, save at minimum is a core tenet that you have to kind of at some point in time serve. Look, I think it's very important that there is compliance with the basics of basic elements of banking. You're talking about KYC, AML, customer due diligence, having the right fraud controls and mechanisms. How do you make your businesses more efficient, but at the same time don't dilute the customer experience? And the important thing here is how do you leverage technology, be it AI, be it new tech stack driven platforms and programs to achieve that. I wouldn't characterize it as regulation is holding us back. Regulation, I think, is here to help us, guide us in a way where we deliver products that set both the customers and the financial institution up for success.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out LoanPro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Welcome to Accrued, the Fintech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through insightful conversations with the industry's best. I'm Ted Huff, here with my co-host Colton. We'll be guiding you through the intricate lending world. Whether you're deep into lend tech or just intrigued by how technology is reshaping lending, you're in the right place. Now let's dive into another episode of Accrued. Colton, man, welcome back.
Thanks, Ted. I'm trying to notice your beard looks really good. I'm trying to grow the beard. Not quite as good as yours, though, my friend. So it looks awesome.
Well, I'll have to send you the link to the beard stuff that I use. I'm telling you, it is fantastic. But today we're not talking about beards, though we've all got a little bit of a beard going on. We actually have Raktim Mitra, the Chief Lending Officer from Varo Bank, on. And man, welcome to the show.
Thank you for having me. Excited.
Before we dive into all the fun questions, like I mentioned, we're thrilled to have Raktim Mitra on. He's the Chief Lending Officer of Varo Bank. He joined the bank back in January of 2022 and has been at the forefront of Varo's lending initiatives, overseeing the development and implementation of their credit products. Now, he brings a wealth of experience to this role. Prior to joining the bank, he held significant positions at industry giants like Lending Club, Goldman Sachs, and Discover. He's leveraging his experience by launching and scaling businesses has been instrumental in shaping the way that Varo's lending strategy has evolved.
Now, in this role, he's responsible for driving that lending business, which also includes innovative products like Varo's Advance and their recently launched line of credit. His experience in financing solutions and his leadership in the lending space makes him uniquely qualified to discuss what's going on in the marketplace and around credit and financial inclusion. Raktim, welcome to Accrued. We are so excited to dive into your journey and your perspective on the lending space and get some great insights from you on the future of lending and digital banking. So, Colton, I know you always have these really good stories and all these little bit of tidbits, but I'd love for you to share with us what your experience has been with Raktim and what got you so excited to bring him on the show.
I mean, the quick TLDR is imagine talking to someone that was at Discover during Discover's crazy growth lending club in the what I view as the heyday of lending club, right? The early days before Radius Bank, like doing some really cool things. I had a lot of my money in lending club at the time that was through peer-to-peer lending, and the innovation lending club was doing Goldman Sachs, and don't think Goldman Sachs. Well, think the Apple Card and what they're doing with Apple Card, and then at Varo Bank. And that breadth of experience all the way from Discover to peer-to-peer lending to at Varo Bank as a bank now. Raktim, we're excited to dive into that breadth of experience and dive deep into lending credit.
Thank you. Thank you for having me, and thank you for the kind words.
So we talked about all these breadth of all the different areas that you've had been able to participate in, right? Like these aren't small things, right? They're very well household names. They're products that people are still using today. I really want to understand what trends you're seeing in the current marketplace, and just from a really high level perspective, how is that adjusting or changing the current market ecosystem?
Absolutely. I think there's a lot of innovation that's happening in this space, which is good. I think of late you've seen a lot of companies and institutions take a very first principles approach to products in this space, and designing products really keeping the customer pain points in mind, rather than historically, I think how products were developed a bit where, hey, does this product make sense from a P&L perspective? Let's find a way to stick this to a customer and maybe market it to them. So that's kind of a refreshing approach. I think what we are also seeing is a lot of personalization and customization, which is, I think, need of the hour. So even with existing products and services, there's a lot of personalization that's happening, which is great for customers. And I think outside of that, and not you're seeing a little bit of risk management and compliance and regulatory compliance kind of discussions happen. And there's always been some news. There's been some news recently around some of the BaaS kind of players get under the radar a little bit. I think it's kind of calling out that while innovation is important and you want to continue to innovate, you also have to keep the fundamentals right, get the fundamentals right. So in general, a lot is happening. Obviously, AI is here, and you're starting to see AI.
Wow. So that's the earliest in our conversations that's come up. So
well, if you really ask someone like what's happening, and you'll go amiss if you don't mention AI. But you're actually seeing like AI, kind of permeate into this space as well. So there's a lot of use cases that have already come up around use of AI in servicing. There's some fraud use cases. I think soon enough we will see more AI use cases in credit, which I think will, if used correctly, is going to be really, really good for this space. Having said all of that, like fundamentally, I think that the core problem still remains. There's like millions of Americans who still don't have timely access to credit, access to even like core banking services in a way that's simple, transparent, that works for them. The good thing, as I mentioned, though, there's a lot of innovation happening. A lot of players are trying to address the space. So I'm really excited to kind of see, what's going on.
So the one thing that you brought up that you started to hint towards, right? And one of the things that I'm seeing happen a lot more is really the focus on the underserved markets, whether that be due to a thin credit file, or maybe it's because they've had something happen in their life. How are you seeing the market handle that today, maybe with technology and maybe with the empathy piece of it? How are you seeing those two things play together, especially for that market?
If you look at the size of that market, it's astounding, isn't it? There's almost 25 to 30% of Americans that have what you call a poor credit score. Vantage, for example, scores 240 million Americans, so that's like almost 60, 70 million customers you're talking about. I recently saw a survey where I think about 45% of customers said that they were looking for credit, which is so important from managing their day-to-day lives, and they get denied for where their credit is. So it's so important to kind of think about how do you kind of serve that space. And then this is not to mention, I think there's about 50 plus million customers that are unscorable because they either don't have a credit file or they're not scorable. So you have to like really think about how you elevate your offering in a way you can serve the space. And this is just talking from a credit perspective, right? Like if you pull back and think about it more fundamentally, millions of Americans don't have basic banking services that work for them in a way that speaks to their pain points. Up until recently, if you look at up until 2019, banks made an absurd, I think, $11 billion charging overdraft fees. So, banks are
Oh, yeah.
basically dinging these customers in the moment of their need. So, not just the kind of products that they serve don't speak to the customers, they're also kind of dinging, these customers. So there's a lot that needs to be kind of thought through in terms of putting together products and services that really speak to millions of Americans, helping them with their day-to-day lives. And it's not easy. There's a reason that that kind of space is not served that well. It's not easy. Traditional line of thinking will immediately tell you like don't go into that space, right? And that's where I think you have to kind of have that intent, have that mission, but then couple that with the ability to serve that space. And when you talk about ability, you have to have the right capabilities, the right tech stack to serve that space. You have to be really, really efficient when it comes to your revenue and cost trade-off perspective. They cannot like wait for multiple days to get their needs addressed. So you have to be fast. And then I think you have to be personalized, and that's the name of the game today, right? And you can't have a one-size-fits-all strategy where unless you're kind of personalized, you are interrupting in some way some of these customers with key things like access to money. And these customers traditionally don't have a lot of money lying around, so it's very important that you manage those experiences in a personalized way. So there's a lot that needs to come together. It has to be track driven. You have to have the intent. In the end, you also have to have the right people driving that, right? Like marrying that intent, marrying that tech capability, and creating products and services and experiences that speak to these customers.
So Raktim, there's a bunch to dive into, but I want to dive into one one aspect of what you said, which was awesome. Is you said the traditional way of thinking does not align with this, and I love that because I feel like for so long, oftentimes within financial services, when you're like, "Why do we do this?" The answer is, "Oh, because that's how it's been done," and that's a bad answer. If the answer is, "Oh, this regulation is this way," or it's more efficient, or something else, that's a great answer. So when you think about this underserved market, thin file, no file customers, a lot of folks in the market stay away due to two reasons. One, fraud risk, right, which we can talk about another time, but directly relevant to this is credit risk, because where banks and financial institutions really make money is on taking deposits, lending those deposits, and earning interest on that, right? So alternative credit data has become a big thing, especially within fintech and looking at other data points. Would love to get your perspective on where the future of alternative credit data is going, and also some examples you've seen from other folks using alternative credit data well, and what that looks like and what those data points are.
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
Take a step back, right? Like when we talk about credit underwriting, you mentioned serving the space is tricky and it's challenging. So absolutely, you have to think about underwriting in the context, and you have to understand, what's the customer base that you're serving, right? And really tailor your credit underwriting to that. But there's for good credit underwriting, you have to fold in multiple other elements as well, right? Along with that, one, for example, is what's the product that you're kind of thinking through? Is it a short-term cash advance loan? Is it a credit card product? Is it a longer installment loan product? The second I would say is what's the context in which you're kind of serving the product? Is it in the context of an established relationship that you have with the customer? Is it within your ecosystem? Versus is it served up in more of a direct to consumer fashion? Extending on that, like how are you acquiring or onboarding that customer? Are you onboarding that customer through an organic channel, or are you competing in a space like Credit Karma or NerdWallet, for example, where you're competing with other offers? I'll take examples that I've been very close to. So for a product that's delivered in a relationship kind of structure, right, where you have another sort of engagement with the customer, leveraging that relationship information, that relationship data is extremely important, in terms of credit underwriting. If, for example, that relationship happens to be the customer is banking with you, bringing in their paychecks, like you have to look and leverage that data in your underwriting. It's so important. But it goes beyond that, right? Like when you have someone interacting, living their financial lives with you, you get so many other signals, and you have to bake in those signals. One example I'll again give is, if a customer is raising their hand and saying, hey, I want to get on a path to better credit, and they've enrolled into your credit building product, for example, and they're doing the right things and taking the right steps, that's a fascinating signal to kind of bake into your underwriting. Overall, look, credit bureau data is important. It's not going anywhere. But I think increasingly lenders and institutions are starting to realize, especially for a certain combination of customer base, product, how it is served up, what channel are you serving through, non-credit bureau data, alternate data is perhaps starting to become a bigger piece of the pie. Now, in my experience, I've looked at a bunch of data, but as I said, I think the things that have stood up to me in terms of alternate data, it's that relationship data element. Obviously, cash flow, transaction data, payroll data is very important. If you just compare it with traditional bureau data in terms of underwriting, you get a very early and a deeper signal, versus credit bureau data tends to be a bit lagged. So in the context of who you're underwriting, when you're underwriting them, that becomes very important. Customer behavior data is another thing that I have seen reasonable success with it underwriting. You start using that a little bit more when it gets into fraud risk management, but I've seen the use case in the credit space as well.
There's a lot of data that you just talked about, right? And it's not like it's all in this one spot, or it's all in this one spot over here. It's everywhere, and it's in different formats, and it has different descriptions, and heck, it may have the exact same label but means something completely different. How are you seeing the market navigate all of that to bring the real-time or near real-time decisions? You said earlier, the near real-time decisions that are extra important to deliver, especially for those who need the money now and they need that instant access. How are you seeing all that get pulled together?
there's been a fair amount of innovation in decisioning systems and platforms to be able to enable that. Like, first of all, there's recognition that yes, we need all that data. Some of that is point in time data, some of that is longitudinal data, some of that is like lines and lines of like transactional data, and you need to bring all that together from different sources, to your point, like some of them maybe in different formats, and kind of also digest that in a way that kind of goes into a final decision that is customer facing. So I think there's recognition of that fact, and based on that, there's I think a ton of innovation that's happened in kind of the decision space. And I'll give you one example, right? Like maybe 5-6 years ago, when I used to have conversation with folks trying to build decision platforms, they used to always tell you that, oh, we have a decision platform that's a no-code platform. You just can stitch together a bunch of rules in like a decision tree environment, and that's your decision. And I used to be like no, that's not how you can make these customized, personalized decisions, because I have to go through so much data, and to be able to digest all of the data, sometimes through like models, machine learning models, whatnot, but stitch that together to a customer facing outcome. Like, we have to write code, and generally, like, that's what like financial institutions do. They do a lot of simulations getting into it. So I think there's that switch I've started to see happen, right? Like, people, institutions that are building decision platforms are now kind of taking that into account, that like this is the reality of what needs to be kind of achieved. So I'm seeing that transition happen.
Colton, what I'm hearing him say is like, you have to have a modern tech stack to compete in the market. Like, that's everything that he just said. That's really where my brain goes.
Yeah, and it ties directly, Ted, you're spot on. Ties in also, Raktim, to the point you're making on personalization. I recently did a survey with about 80 or so bankers that I know within the lending space, and only work in banks and credit unions. I said, on your current tech stack, and most of them, I think we know what the current tech stack and legacy infrastructure is, and most credit unions, I don't need to call them out, but I said, what is the average time that it takes to launch a new product? From, hey, I want to launch a new product, to launching a new product. The average time was 22 and a half months.
Wow.
To launch a new product. So if you think about what really needs to happen, Brockton, for what you're talking about, is you need to be nimble, you need to be quick, you need to launch a personalized product. Maybe it doesn't work, you roll it back, you try a new one. What does that work? Does that work? But if you're spending 22 and a half months from beginning to end, that product is going to work. You're going to make sure, even if it's not working, you're going to continue to push it because you have so much sunk costs that you put into that, right?
Right,
So,
absolutely.
Raktim, I'm curious your thoughts and advice you would give to anyone out there that's on a legacy infrastructure and experiencing those problems of the inability to launch new products, personalized products, and what does that look like? What's the advice you would give them to compete in a market where you have folks that are actively testing new things?
I'll pull back a little bit, right? Like, at the end of the day, every business is trying to solve a consumer problem, consumer pain point. That means they know that the customers that they are serving and what's the key job to be done. Now, if that key job to be done, solving that key pain point requires that they elevate themselves to a more personalized decision, a decision that needs to happen on a more rapid cadence. The product evolution needs to happen at a more rapid cadence. I'd absolutely encourage these organizations to think through the platform that they are on, and how they can get on a modern tech stack. And it's not just about pushing products quickly. A lot of it that you're hearing about, the gaps in risk management and inefficiencies, is being able to kind of test that, right, before you kind of put that out in the market and you get a bunch of impacts. It's also about having the right capabilities and right governance and controls mechanisms to get those products to the market in a safe and sound manner, in a manner that's regulatory compliant. So I think my advice will be, again, like, based on what you think is the core pain point you're solving, your customer base, how you want to kind of see that journey. you have to kind of make those calls. But to me, I think, at least for new businesses, I mean, they have to be fast. As I said, they have to be efficient. They have to be personalized. They need to, meet the regulation. And I just don't know how they do that without being on a modern tech stack where they can iterate quickly. They can bring in the necessity complexity on the back end that creates a smoother front end experience for the customer. And they can get quicker reps on product innovation.
You'd mentioned, we're talking about modern tech stack, and early you very early mentioned AI. So I'm going to just kind of skip a little bit over to that side real quick. But machine learning, AI, I see that as being a space for financial services companies, banks, credit unions, if they do it right, to leverage that to pseudo test these products before they roll out, to look at the data that they have in their loan management software or within their core banking software, and run a bunch of models to get a better understanding of it. And then also at the same time, be able to take their policies and procedures that they have around the regulatory environment for all of those things and just slam it up against the wall with that too. And I believe, and I feel, and I'd love to get your opinion, I believe that by using AI and machine learning to use that data to test before you go to market, before you spend the 22 months, as Colton said, to really figure out, is it even worth spending any more time on it? What is your perspective and your thoughts on that?
To build on that, right? A lot of times, what companies end up doing is they're running experimentations. Like that's how you learn. But there's always a cost to experimentation. Sometimes it's just the experiment itself is costly. Sometimes it's building that experiment is costly. So you have to be really mindful about how you run experiments. So, and there's can be two kind of experiments that you run. One is an experiment that has a decent chance of success. You're just trying to estimate the scale of that success. The second kind of experiment might be more foundational in nature, where you're intentionally making the investment to gather data and learn from that experience. But regardless, I think where AI can come in and help is, before you choose to run these experiments, for example, and I'm keeping product launches aside for a little bit, and I'm talking about this specific thing, because this is what you kind of tend to do more frequently. You can leverage AI to run these simulation models and scenario analysis to kind of test the boundaries of what could be possible with certain experiments.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
Right? There's a ton of hypotheses that people are generating. You have to distill all of that hypothesis into a few experiments that you want to run. That is really going to, have a good impact on your future roadmap. And that is where you can use a lot of, the power that AI has to run a lot of this scenario analysis, simulation analysis to really understand, like, these are the bounds of what I could see through the experiment. And then you can kind of stare at those results and say, hey, out of the 10 experiments that I thought of, like, these are really the things that, have a good chance of, success, or will, help us gather data that we could really leverage to, move forward. So that immediately comes to my mind. Of course, an extension of that is, if you're trying to build a product, that in my mind is a broader experiment on its own. But you absolutely kind of hit the nail on the head about, people generally keep talking about how AI and learning can be used in like customer facing decisions,
Mhm.
and there's a use case there as well. But on the back end, there's a big use case for AI, right? Like you spend ton of time to kind of do all this analytics, scenario analysis, like that can be done so much more efficiently.
Colton, you brought up a bunch of times like the importance of being flexible with the customers, and how like making a small change like moving a due date from the 15th to the 21st can make a huge deal. And a lot of companies don't even look at that. And in my mind, I was just sitting here thinking, because you bring it up, Colton, before, is it, what if you were able to run that and go, hey, this person had been late by 2 days a couple times. What if we just moved the due date out a couple days, because we're starting to see a pattern here? And then now I build that model over here. It informs my LMS that, we're going to make this adjustment. Or maybe we just send out a message to the person and say, hey, we've noticed this has happened a couple times. Would it help if we moved it by 2 or 3 days? If yes, click here. And when they click there, then you have all that automation in the background and everything happens. And I just, in my mind, as you were talking through that, Raktim, that's where my brain was going. And Colton, I thank you so much, man, because you've brought it up a couple times in past episodes that's exactly immediately where my brain went.
Yeah, 100%. One of the cool things, not a LoanPro promotion, but that we're working on the LoanPro side, has been an AI-based servicing next best action. So how do you predict? Right now, folks are relatively reactive. And with the legacy infrastructure, customer calls in, I need to do X. Oh, I can't even do X. My platform doesn't even allow me to change the due date or to do this. Or I got to do it manually and recalculate a bunch of things manually, and then maybe make a mistake and get in trouble with regulators. There's a whole suite of snowball effects with just legacy infrastructure. Take that out of the equation. How do we go from being reactive to proactive? And how do we use artificial intelligence to enable us to understand this is a subset of customers I should reach out to with this message? Maybe this is a subset of customers most likely to go in default, but aren't in default yet. Or this is a subset of customers that I can help in this way, or need help with this, or need this. And if you can predict that, there's some really delightful customer experiences there that drive customer delight.
Absolutely, and this goes back to my point around like personalization and customization has to be the name of the game, not just like at onboarding your customers, putting them through the right funnel, matching their intent with the value, but more importantly, as the customer they become your customer, right? Like on a day-to-day basis, as they're interacting with your product, things like, hey, when I set up my due date, it was set up for the 1st, somehow I just get paid on the 3rd. In a sense, right? Like you're interrupting the customer for the same reason over and over again, and that erodes trust. And how delightful it will be if you can be proactive and come up to the customer instead of the customer calling you and saying, hey, like please change the due date. Like that's a delightful experience that goes over and beyond the personalization that's kind of necessary.
Another cool example that we've had on our side, because with our recent foray over the past 3 or so years into credit, one of the things we've seen with revolving credit cards has been customers who will monitor spend and understand generally where they're at within the spend. And if they go over that or are projected to go over that, they'll ping them or reach out and say, hey, I just saw a big expense, a $5,000 expense at Home Depot. Would you like to roll that into an installment loan right away through push notification?
Right. Yeah,
yes, I would. Great. Installment loan, it opens up the line of credit availability for them to do their purchases that they're generally at. Those types of things. And what I love is so much of AI has, in my opinion, within lending and credit, has been focused on underwriting, origination, how to do so on that side. And the concerns a lot of people have are within fair lending, and the CFPB is pushing pretty aggressively on, if you can't explain it perfectly, you can't use it. It won't work. It won't cut the test for us. What's awesome is that shift now to how does AI impact loan servicing, collections, payments, the experience post funding,
Right.
I think
Exactly.
is where there's less focus and even potentially even a bigger impact.
All I was going to point out is that personalization isn't putting your name on something. Personalization isn't running you through the funnel. I think you both have really outlined really well that personalization is at every single step. It's
Exactly.
everything from due dates, it's everything from terms, it's using the right name, it's sending it to the right email, it's sending the right text message. It is truly about getting it personalized for that individual, not in one aspect of the journey, but the entire journey. And that's something that I'm starting to see happen more in the marketplace as people move to more modern tech stacks. I would love to get your perspective, Raktim, is on how you think it could be done better.
We just have to like get reps on it. I think these ideas are starting to form now. As I think Colton mentioned, when AI and machine learning came about, the first thing was, let's go use this in underwriting. And I think the shift is now happening, is that the better usage is in customer experience, getting that personalization, going through tons and tons of data to really inform you that where the customer is on their journey, in their individual journey, and tailoring your experience, your front end experience, be it how you communicate, how you offer products, elevate them to new products, like to that individual customer's journey. And that is where I think people are kind of getting to. I think, has it been done yet? No. It's perhaps the North Star for a lot of companies, and different companies are at different stages of kind of reaching there. And again, it's always through experimentation that you have to kind of go there. You also have to feed these models the right data so they continue making the right decisions. So to me, it's a process, but I think the thing that I'm excited about is that recognition is there, that intent is there. And companies absolutely realize that the name of the game has to be that personalization and customization, so they have to elevate them.
I love it, and I couldn't agree more. Raktim, what I would love to do, and what I really wanted to do actually from the beginning, we just dove into so many topics, has been, we've talked about how to actually do it. Let's rewind back a little bit and think about what's happening in the credit and lending space right now. And what I'm personally seeing is we're seeing debit interchange shrink. And in my opinion, and I think generally industry's opinion, is it's only going to go to zero as pay by bank and other payment methods come. Debit interchange will become relatively irrelevant. Lots of folks are saying, oh, cool, let me shift to credit. Let me go figure credit and lending out and like make money with interest and higher interchange rate within credit transactions. You have over your career successfully launched several new lending and credit products. So I've got a two-part question, if that's okay. One, looking back, when is the right time to say yes, absolutely? And how do you think about evaluating where to start and how to expand when it comes into lending and credit?
First of all, I'll say that the fact that we are offering customers and businesses more options to pay is absolutely fantastic. I think the rest of the world, most countries have kind of enabled that and made significant strides. It's great to see that things here in the US are catching up with real-time payments. Fed now, I know there's a bunch of institutions that are pushing on this. To manage payments through bank in a kind of risk-free way. There's some ground to cover here, but I think it's pointing in the right direction. The point around being reliant on debit and having to move or focus on credit-based business. I'm not sure if most financial organizations or institutions want to intentionally build a business model that's solely reliant on one revenue stream. It may be where they started, but the long term kind of business, they have to think about diversifying their monetization, right? And if you are in kind of the financial space and the banking space, enabling the ability to spend, borrow, save at minimum is a core tenet that you have to kind of at some point in time serve. So maybe a lot of businesses are in that phase where they're just going from one phase to the other, and kind of that's kind of what you're perhaps seeing. To your second part question about what is the right time to launch lending and go with credit, to me it kind of goes back again to that fundamental the fundamental thing that I was discussing, right? Every business is trying to solve some customer pain point. They have a very good idea about who is this customer base that they are serving. Ideally, they're trying to deliver that value to the customer that the customer is seeking. And I've seen different businesses go about it in different ways. For someone like a lending club, they identified this opportunity to help customers consolidate debt, and they leaned in with lending and credit. Eventually, they have made the transition towards a more kind of banking space. For example, Varo, for example, identified a more fundamental need. As I said, there's millions of Americans that did not have access to banking services that work for them. They often got dinged in their moment of need. So it was kind of a more fundamental buildup of let's offer these customers a banking service that works for them. And then if you look at the product journey and evolution, it has always gone back to the core customer need that you're trying to solve. And if you look at it deeper, you'll always find, and you'll probably more often than not see, that it's not just one product or service that helps you address that pain point. It's actually a bunch of things that need to come together in a simple, transparent, and logical way for it to truly, help the customer. And that, in most businesses will be talking to their customers about it, right? And that's a very good way to go about it. So when you talk to the customers, you get a good sense of, okay, where they are, what is their pain point, what's the current value prop, and how do I need to elevate that value prop to meet the customer with what they need to manage their day-to-day lives, and be along with them on the financial journey. So I think the choice that you make in terms of what you lead with, and then how you evolve your product is really based on that. I've seen different businesses take different models. The other thing, obviously, is lending and credit requires a slightly different set of muscles and different capabilities. So that's another thing to consider from a tech capability perspective. But to me, more often
So
than
you're
not,
saying we have to do leg day.
you have
We
to
can't
do
skip legs.
I think you have to. What we are realizing is you have to do leg day regardless, right? Like with a bunch of the articles that we are seeing on the regulatory side and risk management side, you have to do a leg day regardless if you want to deal with people's money, right? So, but it's just a different, yeah.
Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Let's jump into leg day, and I want to ask a controversial question, if it's okay, given that we went there and it's very topical, and I'd be remiss if I didn't ask about it. You work at Varo Bank. Varo is a chartered financial institution. You all went that direction. There are a lot of folks that do lending and credit and deposit and any banking relationships through sponsor banking aspects. And we've had, in my opinion, some of the best sponsor banks on this actual series. We had Robert Kyle from FinWise Bank. They do an incredible job. And we had the folks over at Colton as well doing some really cool stuff. We saw
it was fun having Ben on.
It was awesome. What was fascinating over the past few weeks, and shout out to Jason McCula, he's done a really good job covering it from a news perspective. Evolve got a consent order. Evolve got the data hack shortly after. Today there was a consent order with Thread Bank.
Yeah.
I don't think it's going to stop, right? I think that there's more coming. I think there's certain sponsor banks that do a really good job and are very focused. From your perspective, Raktim, what does the future look like given this regulatory uncertainty when it comes to sponsor banks for folks that are outside of being a regulated financial institution and relying on that.
Yeah, yep. It's interesting to see this. Of course, it's also hard to kind of listen to some of the customer stories that have unfortunately gotten caught in the middle of this. Um, Look, I think it's very important that there is, compliance with the basics of basic elements of banking. You're talking about KYC, AML, customer due diligence, having the right fraud controls and mechanisms, basic safety and soundness aspects, right? Like, liquidity controls and capital requirements. These are the basics, and these requirements are there for a reason. We've all seen multiple times, and up until very recently, right, like not long ago, where non-compliance with these basic tenets of banking can have severe impacts, not just on the customers, but in some scale to the broader American economy. I think it's also definitely eroded, customer confidence. But at the end of the day, it highlights the importance of prudent risk management and governance frameworks. Um, and I think there's something to be said here about being a regulated bank, about having a skin in the game, which in some sense necessitates that you build, everything on top of a solid risk management and governance like foundation. So I mean, like that's kind of where my head is going. I know this is like evolving story. I agree. I don't think this is going to be the end of it, unfortunately.
So you
Yeah.
say it's an evolving story. I hear
I
you.
know. I was like, pun intended.
Pun intended.
Uh, but I think Raktim, the way you've described it is really interesting, because we've got a couple factors also kicking in, right? So we've got the economic climate where most lenders are seeing slower and slower repayment. You're seeing inflation continue to increase. Now we start to see financial institutions that have shown to have been participating in unsafe business practices. On top of that, as Colton mentioned a little bit ago, is the reduction in a major revenue stream for a lot of these organizations being credit card or debit card interchange. How are you seeing yourself at Varo, as well as others in the industry, really navigate that level of uncertainty and ambiguity that is really going on between the regulators and the economy?
One of the things that I talk about, and a lot of people do, right, especially in credit, for example, it's very easy to give away money. You really have to do your due diligence in how you get that money back. So from a credit perspective, you need to, again, not just have the right underwriting criteria, but you have to have the right setup, the right product use case match to be able to kind of serve that space. And I've seen a lot of folks kind of get tripped up with that last part, which is like, oh, I looked at all the data I could and I did this fancy underwriting, but still, the product isn't performing. And you go back and it's a clear mismatch between the use case that you're trying to serve and in the product construct that you have created. And I think the other thing that's happening, and will, institutions will have to navigate that, and some unfortunately have to kind of not unfortunately, some have to level up their game, is the compliance with necessary regulation. I think there sometimes with the push to do things quickly, in a cost efficient manner, as I said, you kind of forget the third leg, that you have to do this in a compliant way. And that is where some institutions have to like level up their game, because otherwise, like, you may be in business, but you're not in a business that's sustainable, right? Like, you have to kind of do all of those things together. So I don't think there's a perfect answer again here, but there's a few things to consider. On the credit side, as you said, I think it's a very interesting space we are in, right? Like, it's been a few interesting years, right? Like 2020, when we suddenly went into COVID related shutdowns. I think most financial institutions thought that we are going to walk into a deep recession. That led to deep underwriting cuts. People pulled back on marketing heavily. The government put in stimulus. Financial institutions saw the opposite of what they were expecting, and they then had to step on the growth pedal a little bit. Financial institutions did these things that were really good for customers, called customer assistance programs. But what that essentially did is a lot of the signals that went into your data, it kind of masked those signals. So you did see kind of some of the defaults and credit losses kind of go up. People. I think latest origination cohorts seems like there's been some control there in terms of managing those losses, but we are not out of the woods yet, right? Like inflation is sticky, interest rate continues to be high. A lot of savings that were built up through the stimulus programs have been eroded. So it's kind of a watch kind of game for the next 1 year at least. And then there's all of these other items that you have to keep an eye on.
Love that. So as we talk about today, we've talked about a lot of things. From what I've loved about the conversation personally has been AI within servicing. We haven't spoken about that, and I love that theme. Let's, for a minute, at the end of every episode we do in the series, we ask you to look in the crystal ball, step inside the time machine, look 3 to 5 years in the future. My son, actually, my 9-year-old son Hudson, the other day came up to me and said, "Dad, when are we going to travel in time?" Great question, Hudson. I don't know if it'll be possible. We're going to try and do it with Raktim here. Specifically when it comes to lending credit, let's look at lending credit in the next 3 to 5 years. And what are some of the themes that you're paying attention to as you're looking at cutting edge and what's upcoming?
You continue to see, products evolve and see introduction of new products, and some of it may be enabled by AI, some of it may not. But I think we've already started to see that, and it's a great thing for the customers that we are seeing products being built from first principles. I believe I also mentioned that, and we've spoken about this multiple times, so it's kind of beating a dead horse here. But like the need to elevate experiences with your current products. So that needs to happen. I think it's been a theme right now that while you do all of that, you need to ensure prudent risk management practices and compliance. And now the final thing is kind of how do you make your businesses more efficient, but at the same time don't dilute the customer experience. And the important thing here is how do you leverage technology, be it AI, be it new tech stack driven platforms and programs to achieve that. And one of the use cases you mentioned here is servicing. I think there's a lot of focus on digital servicing. A lot of customers right now are interacting with you digitally. So how do you enable a digital servicing ecosystem which is also doesn't kind of take away from the fact that you see some of the complaints about digital ecosystem where people want to talk to people, where the reason behind that is the responses perhaps you're getting back are not personalized to you. They're generic responses. So how do you make those more personalized, but still kind of serve them up in an ecosystem that the customer is willing to interact with you? Like that's one example that I see, not necessarily the lending space, but absolutely in the lending space, but the broader banking space kind of embrace a little bit more.
Just to sum it up, you said something that was spot on, Raktim. How to drive operational efficiency without diluting the customer experience. There's a lot of decisions that are made to drive operational efficiency, then in turn dilute the customer experience. But solutions you should look for combine both together.
Right.
And that's the key. Operational efficiency with a best-in-class customer experience.
Absolutely. Yeah.
Well, I think one of the things that we haven't really touched on that has been alluded to a number of times through the conversation is the fact that the products and services that are being delivered today and the products and services that are going to be delivered in the future are going to be focused heavily on digital natives, not the digital tourists or the digital refugees, as I like to call them, because they weren't from the digital native, but they're kind of getting to the point where it makes sense for them. But all of these things that you've mentioned really are showing that, like, we've got to focus on the digital natives, got to have the modern technology stacks, got to have the personalization that Gen Z and Gen A are becoming accustomed to with all of the consumer-based products and services that they're using today. And all the things you just mentioned really line us up to say, hey, this has to happen. It's no longer going to be a choice. And although it may seem today like the regulatory environment doesn't allow for it to happen, that's where we, as financial technology leaders, have to figure out how do we deliver that experience while maintaining that regulatory compliance and delivering a safe and secure product. That's what I heard throughout today's conversation, is that we keep coming back to that piece of it.
I'd just make one point though, which is I don't think it's correct to say the regulatory environment doesn't allow us to do certain things. Like if you look at what's happening, I'll take for example open banking, right? Like that's a law that was probably a decade old. The CFPB is now intently pushing forward on enabling open banking, which is very, very good for the customers.
Yes.
Right? The ability to share customer permission data so that a customer can get a better product and service is being enabled through regulation. So I wouldn't characterize it as regulation is holding us back. Regulation, I think, is here to help us guide us in a way where we deliver products that set both the customers and the financial institution up for success. Like that's kind of my take there.
I think, and I love that perspective. Where I was more coming from is when we look at regulation, it's typically reactive, as Colton mentioned before. And in financial technology, we have to be a little bit more proactive and then adjust to the regulatory environment that may not be currently configured in a way that makes sense for that type of product and service. And I get what you're saying. Like, yeah, it isn't really holding it back, but it isn't also at the same time, it isn't enabling or pushing us forward. We've got to pull the regulatory process with us versus wait for it to push us, I guess is where I was going.
Right. Like, and obviously, as we think about new products, you'll have to kind of think about regulation. But I think in my personal experience, something that I've seen is if you really, think about a product or a service with, two key things. One is like, is this the right thing for the customer? And am I setting up the customer for success? You really, and I stress on the word rarely, come across a point where you're at odds with regulation. Like at least in my experience, I haven't seen that, but like that's what kind of I think about when I think about trying to do something new or trying to think about a product or a capability in a new way.
Well, Raktim, it's that time, man. I want to tell you, thank you so much. The conversation today has definitely been intellectually and mentally stimulating. So I appreciate you diving in and sharing your perspectives and your insights, and definitely learned a lot by listening to you today, and really appreciate you coming on the show and sharing that experience and that knowledge with us.
Thank you so much for having me. It was a fascinating conversation. Loved every bit of it.
Yes, thank you, Raktim.
Thank you.
Well, folks, that does it. That's another episode of Accrued. If you've made it this far, be sure to like, share, subscribe. Head over to Fintech Confidential /access to go ahead and sign up to be notified of when the next episode launches and any of the great notifications that we send out on a regular basis. And as always, keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to GetHawkAI.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.